All right, everyone, so we have some warning signs coming in that show a sign of a stock market crash in the near future. So what I'm going to do in this video is show you a few indicators that I've been looking at that I think are the most reliable sign of how the stock market will perform going forward. Now, to start off, here is an indicator that I've been looking at ever since back in March, and that is the sentiment indicator. I'll put a link down to this in the description, and what this does is shows what percentage of the stock market is long and what percentage is short. And if you've seen any of my previous videos talking about this, I've said as long as the majority of traders remain bearish, the stock market should continue to go up. But once we cross that point where more traders become bullish than bearish, that is when you should really be careful in the stock market. And so if you take a look right now, where are we? We are just a touch under 50%. So right now we're almost there. We are extremely close to being at that crossover point where we have more people bullish in the stock market than bearish. And as you can see, this has been moving up pretty consistently. This chart goes back to, what is that, June. So ever since this past summer, traders have been bearish, but they've been slowly getting more and more bullish. And like I've said, it's usually on these dips that buyers start to come in and that ratio becomes more bullish. So that's exactly what we're seeing here. First, we saw the drop in September, and then that brought in a lot of bullish traders. And then this last drop we've had over the past couple of weeks also brought in a new wave of bullish traders. And so if you take a look at the percentage, we are right there, right at, essentially right now it's even between who's bullish and who's bearish. And taking a look at the analysis of this, the number of traders net long was higher than yesterday and 7.5% higher than last week. So that's really the main point of this, is that when an increasing number of traders become bearish, that's the time to be careful in the stock market. And so like I've said, this is what I've been watching pretty much ever since March, to see when investors start to become overly bullish. That's when I'll be cautious in the stock market. Now, even though that indicator didn't actually have investors flip over to bullish yet, this is another one of those sentiment indicators, really the same thing measured slightly differently. And this one gives us pretty much the same picture. This is the AAII Investor Sentiment Survey. We can see 35.3% of investors are bullish and 35.3% of investors are bearish. So right now it's exactly even the number of bearish and bullish traders in the stock market. And you can take a look at the analysis. Bullish and bearish sentiment are tied for the first time since January 2019. Okay, so we're now at one of these points where we could see bullish investors start to outpace the bearish ones. And like I said, that usually is a pretty good sign of when we could see a fall in the stock market. Now, I'm not saying that's going to happen right now. We're going to straight crash 50% from here. If you can take a look, we are still above the normal bearish percentage, right? The historical average for bearish is around 30%. Right now we're at 35%, and the historical average for bullish is 38%. And right now we are again at 35%. So really what I'm expecting to see is if the stock market continues to drift downwards, we're going to see more and more people stepping in, buying the dip, and this bullish percentage will run up. You know, if we keep up this pace where the stock market keeps drifting downwards and more investors keep coming in to buy the dip, and we get well over this 38% bullish percentage, that's potentially when this so far is what has been, a 10-15% correction could turn into something bigger. So again, I'm not predicting that the crash is going to happen right now, but the signs are showing that investors are starting to become more bullish, and once they become overly bullish, that's the time you want to be fearful in the stock market. Now, if you want to listen to someone who says that the top was already in and that we're going down from here, that is David Einhorn. He is one of the investors that shorted the housing bubble in 2008. And right now he says that the stock market has already put in a top. So that high in early September he thinks was the top, and that this bubble that we're in has already burst. David Einhorn says the top is in for US stock market after an enormous bubble in technology stocks popped last month, and he wrote about this in his latest October 27th letter. Now, I don't think anyone can predictably call when we're going to see the top of a stock market bubble, so he may or may not be right. But what is valuable in his letter is his 10 signs that show that we are potentially in a bubble, right? These are signs of a frothy stock market, of investors being overly excited, overly confident in certain stocks. And so we can take a look at some of those signs. The first one is an IPO mania. I would say that is definitely true, where you have stocks like Snowflake jumping over 100% on their IPO day. You have extraordinary valuations and new metrics for valuations. This one, again, very easy to agree with when you have all these investors saying that earnings don't matter anymore. Even revenues don't matter. Now we're just looking at car deliveries. As long as the car deliveries are going up, that's all that matters for the company. The next one, a huge concentration in a single sector in a few stocks. Obviously, I've talked about this in the past. Those big FANG stocks make up like 40% of the S&P 500, so that box is definitely checked. A second tier of stocks that most people haven't heard of, at S&P 500 type market capitalizations. For that, all you have to do is take a look at Tesla. If they were added to the S&P, I think they'd be one of the 10 biggest companies in there. So that is true. The more fanciful and distant the narrative, the better the stock performs. I would say that's definitely true. This has been a year for story stocks. Any stock that has a good story behind it draws a lot of attention, and they have performed very well. Outperformance of companies suspected of fraud. I would say that there are some signs of this, especially a lot of the Chinese companies in the stock market have been under investigation this year. Outsized reaction to economically irrelevant stock splits. Yep, definitely with Apple and Tesla. Increased participation of retail investors. Focus on the best performing names. That's definitely true. There's been multiple studies showing that this is the most involved retail investors have been in a very long time. Incredible trading volumes in speculative investments like call options and worthless common stock. Yep, we have Hertz stock that ran up thousands of percent. You also have Kodak stock that did that based on them being assigned to make pharmaceuticals. And the last one is a parabolic ascent towards a top. And that definitely happened back at the beginning of September, where if we take a look at what the stock market was doing the whole month of August to September 1st, the stock market just went straight up. So that definitely fits that narrative of a parabolic top. So those are all very good signs that the stock market is overly frothy and could be ripe for a pullback. So like I said, I don't know if this is the top and we won't go higher eventually. And David Einhorn doesn't know that either, but those are good signs to keep an eye on. When you see this type of investor behavior, that is a sign that we could see a significant pullback coming. Now, in terms of what I think the stock market is going to do, as I talked about in my Joe Biden video, talking about how him winning would impact the stock market, I think after the election, we're going to have a rally. It might not be that much. It might be back up to this point where we made the last two tops. What is that, around 350 on the SPY? And then after that, I think investors would have the realization, right, higher corporate taxes, higher capital gains rates, and then I could think we could see a bigger sell-off in the stock market. Now, we could also just keep going down from here. The level I'm watching right now is this 200-day moving average, which is right around 310. I think if we break below that, there could be more downside. Now, all of that being said, what am I doing right now? I'm not doing anything right now. I'm not planning on selling any of my stocks whatsoever. If anything, I'm planning on buying more. And I also am keeping an eye on the stocks on my watch list to see if I want to buy any of them when they fall down to more attractive prices. I'll put a link up to my video right now talking about my stock watch list, which are 5 stocks that I'm keeping a close eye on and that I would potentially buy if they do see a significant drop in price. And so as of right now, I'm just watching and waiting. If we did break below this 310 level, I would potentially hedge my portfolio with a couple of put options or buying some options for the VIX. But I will make a video to update you if I do end up doing that. As of right now, I'm just waiting to see what plays out with this election and how the stock market will react to that. So that's it for the video. If you found this information valuable, hit the like button to help push this video out to other viewers. If this is your first time watching one of my videos, hit the subscribe button and hit the bell icon so you don't miss out on any of my new uploads. So that's it for now, and I'll see you on the next video.